Reserve Bank of India has announced the quarterly monetary policy. Reserve Bank of India has cut the CRR and repo rate by 25 basis points. Well, CRR now stands at 4% and the repo rate stands at 7.75%. RBI has projected that economic growth in the current fiscal will be 5.5% against the estimate of 5.8%, and the average WPI inflation to be moderate to 7% in the 2013-14 from 7.5% in the current year.
Auto and home loans are set to become cheaper as the RBI slashed repo rate and CRR by 25 basis points in its third quarter monetary policy. Repo rate now stands at 7.75% while CRR is at 4%. Consequently, the reverse repo rate too decreased to 6.75%. Now let's look at the impact on your EMIs. For instance, if the interest rate on a 10-year housing loan of 10 lakh rupees lowers to 11% from 11.25%, it will translate into a saving of approximately 140 rupees per month in the EMI. Annually, you can save close to 1700 rupees. The repo rate cut was in line with market expectations, and repo rate cut will reduce the cost of borrowing for individuals and corporates. The CRR cut will inject 18,000 crore rupees additional liquidity into the system to perk up growth through reduced cost of borrowing.
Expectation is that with more money that banks can lend, and the fact that they can borrow from the Reserve Bank at a cheaper rate, and the RBI has signaled that it is going to cut a few more, the repo rate a few more times, banks are in a mental position to cut interest rates. What does this mean for you and me? Our deposit rates will go down for sure. So if any of you are planning to put your money into FDs, do it today, do it now, this hour, because banks are very quick to cut deposit rates if they see the Reserve Bank signaling lower interest rates. As well, there is a chance that your EMIs will fall. So if you're planning to buy a car, good to wait for a week or two because your EMI could fall. It would be calculated at maybe 10.5 instead of 10.75. If you're already a home loanee, your EMI could well fall. That chance is there after what the Reserve Bank has said it has done and what it has promised to do, maybe a couple of more cuts.
We've decided to reduce the policy repo rate under the Liquidity Adjustment Facility, LAF, by 25 basis points, bringing it down from 8% to 7.75%. Consequent to this, the reverse repo rate under the LAF, determined with a spread of 100 basis points below the repo rate, gets calibrated to 6.75%. Similarly, the marginal standing facility MSF rate, determined with a spread of 100 basis points above the repo rate, and also the bank rate, stand adjusted to 8.75%. These changes have since come into effect immediately after the announcement. We've also decided to reduce the cash reserve ratio CRR of scheduled banks by 25 basis points from 4.25% to 4% of their net demand and time liabilities NDTL, effective the fortnight beginning February 9, 2013. This reduction in the CRR will inject primary liquidity of around 180 billion rupees into the banking system. Today's decision to ease the monetary policy stance was informed by three considerations. First, both headline wholesale price inflation and its co-component non-food manufactured products inflation have softened through the third quarter.